everybody. Welcome to Trading Together. I'm Mel Gacee. Today is January the 22nd. It's Thursday. So we had an interesting overnight session. We ran up most of the night and opened up with a gap about roughly 40 points gap. And so here we are. We're slowly we've sort of dipped a little bit. But we are slowly, it looks to me like moving up today. Looks like Anna is here. Good morning, Anna. Good to see you. And if you're here and you haven't said hi yet, welcome. Please drop your name in the chat. This is a place for all traders, open to all kinds of questions and comments. Say hi. I would love to get to know you and just I have. All right. So let's take a look at currently. Good morning, Gavilan. Good to see you. We are currently battling it out right here at the VWAP. You guys know how much I like the VWAP. I am currently in puts. I'm going to wait and see if we can cross down through this VWAP and then I'll jump out. And so here, and we will take a look at the charts for the morning so far. Aggie is here. Good morning, Gavilan. Good to see you. Thank you. Good to see you too. All right. And we'll zoom out here and take a look at what we've got right now. So as you can see, we opened up the morning with this gap up, with push up, and we hit a high of 690.6 on the SPX. We then came all the way back down 686, which was about roughly a 40-point drop equivalent on the S&P 500. And we recovered from the 6,900 level. So this line right here is equivalent to 6,900 on the SPX. And that's an important level. That is a support level. It's held very well. It's held nicely. And we dipped below it just a bit. You can see just what they would call a look below and fail. That's what that is called. We have a look above and fail. If it pops up over a level and comes down, we have a look below and fail. If it pops below a level and comes back up. So that this would be called a look below and fail, which is what we got at the 6,900 test. So that to me is bullish. So I'm watching to see how we handle this test of the VWAP. I think we could get another jump here. The VWAP has, so we've come down through it. 100 came back up through the VWAP, came down and tested it. And so far we're bouncing. So I'll be watching that. I'm looking for potentially going long here. So I'm going to be watching. I like to see the MACD actually roll over, which it hasn't done yet. So the MACD is just a little teeny bit red still. It's getting ready to roll over. But I like to see it finish that move because sometimes we get a little fake out. Good morning, Audrey. Good to see you. So sometimes we'll get that little fake out. And that's why I like to kind of wait. The MACD is a lagging indicator. It takes time to turn, and we don't get the signal early. We get it late. That's what a lagging indicator does, gives us late signals. I still do wait for it because sometimes we do get the turnaround. So that's what I'm watching for right now. The VIX is, as my mom would say, got knocked into last Thursday. So the VIX has been knocked down pretty significantly. The VIX hit a spike at 21 and has since come all the way down. Okay, there's a nice push. I'm going to look at some calls here. I'm looking at the 689s. So let's just see if it'll give us a little pullback here. I'd like to get a little pullback here. So we could get in. And 690 is our top. So we do have a little room. I'm going to go ahead and try this call here. I am in, punch it. And it's up about 3% right now. Just up about 3%. We're at this short-term top, so I was hoping we get a beat of that. That's not pretty. If we break the VWAP, I'll probably jump out at a loss. All right, Eggy, did you call it 689? It is the 689 call. Yes, you're exactly right, Eggy. All right, let's see if we can try to come up here again. All right, trade is down about 6%. All right, almost flat now. Let's see if we can get up to this top again. This one right here, right there. So that's where we hit before. And then we hit right at it this time. Let's see if we can push up through it. We are just almost flat, about negative 1%, basically flat. All right, baby green right now, just teeny, teeny green. Basically flat still. Johnny Tran, good morning. Good to see you. Here's our top again. We're up just about 1%. If we can push through this top, I'll jump out. %. There's a little tiny push. Where do you see percent how much? Great question, Eggy. I will explain that in just 1 second. It's on Thinkorswim on your monitor tab, but you have to modify your monitor tab, and I'll show you that in just a second. And if you guys are in and you see a profit better than mine, you don't have to wait for me to get out. You can take that profit. So we are hitting this top again and getting a little rejection off of it. There we go. There we go. All right, I'm getting close to jumping out. I'm going to go ahead and jump out here at 7%. Punch it, I'm out. It should keep going a little bit. Let me know if you guys followed. Johnny thinks it'll break through. It did break through, Johnny. Got 7% on that one. So let me know if you guys took it as well. And then I will show you, Eggy, what that screen looks like. Let's see. All right, so on the monitor tab over here, there's a little settings button where you can set PL percent. You look for it on the left and add the column right there, and then put it over to the right. That's how I do it. Hopefully that helps, Eggy. All right, still going, guys. Nice. Very, very nice. All right, so what I'm waiting for now, since usually I don't try to play the same move twice. That's a rule that I have. Sometimes I do, but it's a special circumstance. Usually I don't play the same move twice. And I take, as you guys know, small wins out of these moves. I'm looking for a slice of the pie. I am not looking to catch the bottom or the top. That is not my style. I'm looking to catch a piece of the pie right down the middle. That is what I'm trying to do. So when I identify a trend, I will jump in. And usually I'm not going to jump in at the beginning because you can't identify it at the beginning. You've got to wait. You've got to wait for the MACD. You've got to wait for the moving average to curl up. You've got to wait for the cross of the VWAP. There's several things you have to wait for. So usually you don't get those signals until the trend is underway. So usually I'll miss the bottom of the move, and I almost always miss the top of the move, because even though I know we'll probably come up here and hit this this overnight high. This is our overnight high, this yellow bar. I'm pretty sure we'll come up and hit that. I'm not going to trade that way. It's not how I trade. I look for just a slice. I'm looking for consistent base hits. I have over a 90% win rate by trading that way. And that works for me. I'm a profitable trader. And this is just the style I've developed. There's no right and wrong. A lot of people will trade longer and they'll hold for a 2-to-1 reward to risk ratio or different styles of trading. There's no right and wrong. This is the way I've developed. And you are going to develop as traders in your own way. So I'm going to teach you my way. And as you grow as traders, you'll develop your own way. And there's no one right way. Okay. There's many, many ways to skin this cat, as they say. So what I'm waiting for now, since I don't usually trade the same move twice, is for this move to get tired and to give us a little pullback here. And I may or may not trade that to the downside because we are now currently over the VWAP. So that tells me we're more bullish than bearish. And of course, our open told me that as well, because we opened with a gap up. So we're more bullish than bearish. So if we're over the VWAP on a day when we're more bullish than bearish, I'm very careful with puts above the VWAP on a bullish day. So that is something that I really highly recommend for new traders. Use the VWAP as your signpost, right? I always talk about it as the highway, right? If we're north of the VWAP, we're going up. If we're south of the VWAP, we're going down. But use your indicators, right? So you don't want to take a call over here just because we're over the VWAP, we're moving down. You don't want to take the call there, right? You want to wait for that the MACD to roll over. You want to wait for the moving average to move up. That's when what you're looking for on the call side is what I call the Nike swoosh. We want this downward move and then this check mark, right? So we want to see the downward move and then we wait for this confirmation. We wait for this MACD to roll over. We wait for this moving average to roll over, and then we take that call, right? All right. Anna did earlier 3% loss. Sorry to hear that, Anna. That was that the trade that I just took with you right now, or did you do something else? Because the trade that I took with you kept going up. So hopefully if any of you took that with me, you did well. Okay, so here's our reset. So we had this nice little move up. We're coming right back down here. And we are getting some downward signals, but again, we're over the VWAP, so we got to watch that. Oh, you entered before the live. Okay, Anna. Well, 3% is not bad. You're going to be okay. That's okay. All right. So here's our little pullback. What we want to see now is, are we going to continue down? Are we going to break the VWAP again? Try and test it again here like we did a minute ago? Or are they just going to give us a tiny little break and then continue up? So we would call that a higher low, right? So here's a low. If we continue up, we would call this a higher low. That's bullish. All right, our VIX is still knocked into last Tuesday. And I don't mean exactly Tuesday. It's just a phrase my mom used to say. I grew up in the old days when they threatened their kids with violence. My mom used to say, if you don't act right, I'm going to knock you into next week. She didn't mean it that way, but it was something she used to say. So I always, when I see the VIX, I'm like, okay, VIX got knocked into last week. So it's under 16 right now. And like I said, VIX did give us a pop up to 21. So we are seeing it coming down and giving us some just suppressed volatility. And remember, we talked about that, the VIX being the fear index. When the VIX comes down, the market goes up. Fear is coming down, market is climbing. So that is what the VIX is telling us right now. The VIX is going down. The market is coming up. So this looks to me like just a little temporary pullback. Doesn't look like we're going to continue down. Let's see if we get the MACD to turn again, because we got these little flat motions here on the MACD. Nothing major. You can't even barely see them. And what that means, when you see these bars teeny tiny like this, what that tells you is there's no momentum. There's no strength. So when you see these little teeny red bars, there's no strength in the downward move. If we go green again and these bars start growing again, that'll tell you that we're getting volume on the upward move. And could we consider calls here? Yes, but I'm going to be cautious right here at the overnight high, right here on this yellow line. Because what did we do earlier? We came a little bit over it and then boom, we reversed. Now that doesn't mean that we can't climb and climb and climb. We can, and we're having a bullish day. But I'm going to wait and see if we get a recapture of this overnight high or if we test it and fail. So for me right now, there's no call trade. Even though the MACD is brightening up again, telling us, all right, we could consider a call. Because of this overhead possible resistance, I'm going to wait. I'm going to give it a chance to show me what it wants to do here at this overnight high. And as you guys know, one of my favorite sayings is, 90% of trading is waiting for setups, waiting for your move to play the way you need it to, constantly waiting. So that's what I'm waiting for right now. I'm going to watch and see what we do when we get here. It is possible that we get another reversal. So I'm not going to take that chance right now. So when I take trades, for those of you who are new, who haven't followed me before, when I take trades, I'm what's called a scalper. I'm taking short in and out trades, usually lasting 1-2 minutes or less, even sometimes just a few seconds. My trades are very short and sweet. I'm looking for small base hits, and I trade what's called 0 DTE. So I'm trading options. And options is not the same as trading stock. Options are what we would call a derivative of the stock. So in my case, I'm trading options on the SPY, and I'm trading 0 DTE. That means they will expire, these options, today. So all options expire worthless. So I have to make my move, and I have to be in and out of that trade rather quickly, because as we move into the later parts of the day, if I'm holding an option that expires today, it really doesn't matter a whole bunch what the chart is doing. The closer we get to expiration, the more money my option loses, and that's what's known as theta, or time decay. So I'm very careful, even though it's a risky strategy to trade 0 DTE and to scalp. Those are risky strategies. I add caution to my strategy by making sure I'm in and out quickly and keeping my stop loss. So my risk management is very, very important. And I am very serious about my stops. I don't let trades go to full loss, because that's how you blow up your account, right? So I'm very careful with that. So I take a higher risk strategy and I give it a little bit of borders and boundaries to make it not quite so risky. So that is my style: trading options, 0 DTE options on the SPY, scalping those options. All right, so we're getting a little slow down here. As you can see, it's just kind of holding steady. It hasn't quite hit the overnight high. So it's just kind of holding steady here and waiting to see if we're going to break that overnight high, or if we're going to come back down and retest this VWAP. We will see what the market wants to do. Another thing I like to look at is the volume. So if you come on over here to this options chain, this is what they call the option chain, you will be able to see what the volume is on the options. And that tells you basically how many of those options have been traded. So this right here, this volume and this open interest, volume and open interest are two different things. Volume is telling us how many are being traded today. Open interest tells us how many people were holding this position as of last night. So volume is a dynamic number, constantly changing, only growing. It doesn't go backwards, it grows. And then open interest is a static number, only gets updated overnight. So everybody who bought these options today and held the position overnight, tomorrow we'll see this open interest number reflect that. All right, nice push up to the overnight right there. Now let's watch and see what we get. So volume is one way that I kind of try to decide where is the money? Where are people putting their money? Now, just because we see that an option has volume, for example, on the call side, the highest option being traded right now is the 690 call, and it's been traded 324,000 times so far today. What do we have on the put side? Nothing that high. The highest we have on the put side is 184,000, sitting at the 688 strike. So we have almost, well, more than twice as much volume at the 690 call. So that will give you a hint that more people are betting on the 690 call than are betting on the 688 put. And that kind of gives you an idea that we're bullish. Now, you cannot trade on these volumes alone. They switch and they move quickly and they turn on a dime. They change very quickly. We can drop right now 40 points and boom, those volumes are just going to be in a second. You'll see them change. But it's another mile marker, right? It's another way to gain an idea of the bias and the sentiment of the market. So right now, the bias and the sentiment is bullish, and a lot of different things that are telling us that. So that's what I'm watching. We have not yet broken this overnight high. So again, we only did that one time. First thing this morning, right out of the gate, we broke, but we haven't done it yet. So we dropped down and reversed back up. This is what we call a V-shaped reversal. V-shaped. You can see it. Drop, rise. This is a V-shaped reversal. And I'm not surprised. The day was looking bullish from the very beginning. But they will do things like this, basically, in my opinion, to trap retail traders. This is what they try to do. You know, we open up with this beautiful gap up, we start running up, and then what do? Flip it on you and pull it down 40 points. What is the reason for that? I think it's to trap retail. I think it's to create liquidity. It's to take your money, and it's to give them a better entry point for this move right here, right? They want to make their money. So they're going to bring it down. Now they've got a beautiful buy point right here. And they brought it up, let's see, 20 points since that bottom. So there you go. Right now, if we get a break of this overnight high and then a little pullback, maybe something like this, I would consider going long again, meaning I would consider taking calls again. We got 7% on that last one. That was great. And if anyone has comments or questions, please feel free to drop them. There's no trade right here at this moment until we break the overnight high and until it gives us a little check mark. That's what I'm looking for. Audrey, a bit off topic, but I've seen traders online talk about the London and Asia sessions and the trades after the New York session closes. Are you familiar with that? Because I'm confused. Yes, I am. Now, I don't trade London or Asia, but some people have strategies built on where the London high was, where the London open was, where the London close was, where the Asia high was, Asia open, Asia close. They track those levels kind of like I track the daily movements. So I track the highs of days, the overnight highs, the overnight lows. I track those things. Some people have strategies built on Asia and London or London movements. And there is something to that. Now, I've never really looked into the strategy or followed it, but I do know there is something to it. So, and who knows, maybe it's self-fulfilling prophecy. We don't know, but there are strategies involved in that. And I, like I said, I don't trade those. I use my own levels that I watch, but you do some research on it. You might find a strategy that you like. There are a lot of strategies out there built on the London and the Asia levels. But great question, Audrey. Great question. So my levels are going to be yesterday's high of day. So that's going to be this blue line. Let me zoom out so you can see them more clearly, concisely. And let me see if I can find the low. Where did the low go? Way down here. Okay. So this was yesterday's low down here at 677. We're a good piece above that, over 100 points over that. Yesterday's low, that's the blue line. Yesterday's high, right here, that's this blue line. Overnight high, that's this yellow line right where we're sitting right now. overnight low right down here, which we haven't even tagged yet. We sort of got on the way to it, but stopped and pulled up. Overnight low. So those levels I track. Then another set of levels that I track is the open, the 15-minute opening range. That's these green bars. So this is the high of the opening range. This is the low of the opening range. Right now, we are inside of the opening range. But you can see that sometimes those levels also get respected. So today we kind of, not so much, but we're inside of it now. So let's see what happens. Some people trade breaks of the opening range. Trade, when we break the upside, break the downside. I don't necessarily trade the breaks. I don't trade opening range break strategies, but I do watch it because there are times when that opening range can act as also a support and resistance for us. All right, so we are still battling it out here at the overnight high. So I'm glad we didn't try any calls yet, because we just had this, we did have a move, but it was kind of small after we took that initial move up through the VWAP. We had that pullback. It wasn't quite big enough for me with this overhead resistance here. So let's watch and see. That's what we're going to do now. Watch and see what happens. If we continue to reject it and move down, we should retest the VWAP. If we break through it, we should go higher. How much higher? I would the daily to gauge that. So let's take a look at that daily chart. And I like to chart the SPX. You can see the gaps better on the SPX. So that's one reason why I chart it. And remember, SPX is the index. It's the S&P 500. The SPY is the ETF built over that index. Okay, we're coming down a bit, getting a little reject off of this overnight high. So let's see, if we continue up through it, where are we going to go? We're probably going to fill this gap right here. We've got a gap that was created on the 16th. We dropped down to the 20th. Remember that big gap, guys? That was a big, ugly red day. And we've almost come to fill it between the open of that day and the current day's close. So opened at 69.60. So that is exactly 38 points overhead. So if we are to push up through this overnight high, we could come up with this overnight gap, or excuse me, this gap that was created on the 16th. Try to fill that. Now it's still, like I said, that's 38 points overhead. Could we get that high? I think we could. I think it's possible. But we'll have to watch and see what kind of movements we get. Right now, that would be another 40 points. That's 1.5% move. It might be a little large. As you can see, we're rejecting. So this is why we didn't take a call here, because look at it, ticked right. Look at the precision. They don't always hit it to the tick, but this time they did. Zoom in and look at that, to the tick, and then it reversed. Doesn't mean it won't come back up and give us a Nike swoosh. It can, but right now that level is getting respect as resistance. So we're going to wait. We're going to wait and see, as many times we have to. You can see on the daily, these are where I'm getting my targets. So let's come back to the minute. That's the futures chart. I also like to watch. All right. Little bit of descending volume here telling us, are we committed to a down move? Maybe not. The volume is kind of saying, I don't know. We're not so sure about moving down. So that's another thing I look for. Volume will help us to know where we're going. And again, really none of these things, you can't really trade on any of these things by themselves. You've got to add them together. It's kind of a big, you're painting a picture, right? You're adding pieces to the puzzle. All right, so let's see if they're going to give us a push down or we're going to do a swoosh and move back up. What I want is a clean break of the overnight high before I get into a call. A decisive break. Not just hovering around it over under, but an actual strong break over it. All right. So there's a little push up. Let's see if we can get that moving average to turn over. So this one right here, this moving average is turning right now. It turns this cyan or turquoise color. When it senses that we're moving up, it turns color. When it senses that we're moving down, this is called the Hull, Hull, the Hull moving average. I like it. It's a faster average, so it's going to give you falses. You can't trust it all by itself. You've got to use it together with the MACD, some other moving averages, the RSI. You've got to look at it in context, right? But it does give you a little heads up when things are starting to change. All right, let's see if we can come back up and test this top again. So we've been climbing, but over the last few minutes, I'd say maybe 20 minutes right in through here. This is rangy. This is, you know, kind of up, down, up. It's just ranging sideways. We're not getting a strong push up or a strong pull down. We're just kind of going sideways for now. And when we get that, that's when we have to wait. But we do have a win, so that's always helps you feel better, right? When you're in the waiting period, it's always nice to see your account looking green. So the other thing I'm going to look at when I'm waiting for a trade is I'm going to look at what I call the leaderboard. This is watch list. Little push here. And on my watch, all of the indices or the major indices, right? NASDAQ. I'm holding all of those on my watch list. I'm also looking at the ETFs over indices. That would be, so over the Russell, the ETF is the IWM. That's how we trade the Russell. The ETF, of course, over the S&P 500 is the SPY. That's what we're trading here. The ETF over the Dow is the DIA or diamonds. And the ETF over the NASDAQ is the Qs or the triple Qs. There are other ETFs, but those are the big players. So those are the ones I usually use if I'm trading any of those indices. But by and large, the bread and butter is the SPY for me. All right. Aggie, can you explain why you wait until break? What does it say you that makes you want to trade? That's a great question, Aggie. Great question. And we are about to break it right now. The yellow line is the overnight high. That's the highest we got last night in overnight trading. Lots of times that level gets visited and revisited. Okay, so now we're getting a break and we're getting the MACD a little bit. I want to see a decisive break here. Look at the 690 calls. Got a little reject here. So we haven't quite broken it yet. Just because we get one candle piercing doesn't mean that we have recovered it. So that's what I'm watching. And look at how the MACD came back red for a second. So let's see what happens. So that is the reason, Eggy, that is a level, and you can see that it reacts to that level. So I wait is because of these rejections, right? This one here. And what it's currently doing right now is trying to decide, are we going to reject it or are we going to recover it? So that is the reason I wait, Eggy. There's not enough reward to make it worth the risk. So when swoosh right here, right, we had this Nike swoosh right here, I wouldn't take that because there's not enough room between where we were and the top of this level in case we reversed, which we did. So right now, let's see what we get. Are we going to reverse? Are we going to push up? I have to wait a minute and see. I can't trust the first candle. I have to wait and see. I do have calls loaded though. I'm getting ready to jump in, getting closer. So in the meantime, while we're watching this, we can talk about what's going on the watch list. Meta in the leader spot. Meta is up 4.3% today. Big move up on Meta. Silver is up 3%. The Mag 7 as a whole, is up 1.6%. That's very nice. Tesla is up nicely at 1.5%. Amazon, 1.4%. NVIDIA, 1.4%. The Russell is leading. Okay, still pushing. The Russell is leading this rally. It's the strongest of all four of the indices right now, and it is sitting at 1%. I'm watching closely this break here. So Russell leading the rally. Google is up 1%. Gold and silver both up today. Microsoft up 1%. Dow is ahead of us at 0.89% positive. NASDAQ also ahead of us at 0.8% positive, and we're bringing up the rear at 0.68 positive. All right. We got, give us a break here. It's really fighting. So basically all three indices ahead of us. All right, I am going to get ready to jump in. All right now it's up 4%. Nope. Down a little bit. All right, we're up about 2%. Up about 2% right now. It's a little bit extended. I might take a small win here. It was a nice break of the overnight high. Here we go. There we go. Nice. All right, I'm going to jump out here at 5%. Punch it, I'm out. Let me know if you followed on that one. Let me know how you did. Might come back down and test that overnight high here. And this is why I jump out so quickly. And let's see where we go from here. I think we've got a ways to go upwards. Doesn't mean we can't pull back first. 2% for me, low, but okay. All right, Aggie, that's all right. There's also a little delay on the stream, I think, of about 4 or 5 seconds. So sometimes that can mess you up. BD, 689 or 690? I think I was in, let me see what I just took. I don't even remember. Filled orders at 690 was my strike. BD. Johnny, you got 4%. All right, Johnny. And it's still climbing, and I think we've got a ways to go. But you never know when they're going to come right back down and retest this. So for me, little wins are okay, especially when I've made my goal for the day, which I did. All right. But I do think we've got more to go. But congrats, you guys. Tiny win, but that's okay. And look at that VIX, just really getting hammered. All right. So now, again, this is one trade per move. So now I'm going to wait. Oh, look at this go. Now I'm going to wait for it to pull back again. It could take a while. I think this move could travel. But I will wait again for it to pull back, and then I will trade again to the upside. If it pulls back down through the overnight high, I may take a quick put. I'm going to kind of watch and see. All right, Aggie, should I go for market or limit? Great question, Aggie. Let's talk about market orders and limit orders. I'm sure everybody knows, but I'm just going to clarify. A market order says, I don't care how much it is, fill my order immediately. Fill right now. And a limit order says, I will not pay more than this amount. I won't pay a penny more than this amount. When we trade a lot of products, limit orders are the way to go. And old school traders will cringe when we talk about market orders. Old school traders, we were taught limit orders always. However, and that's true, limit orders for things like spreads, for things like purchasing stock, for things like swing trades. Use your limit orders for things like low float stocks. For heaven's sake, use limits, right? Because what can happen in a thinly traded stock is, some whale comes through, you put a market order, some whale comes through exactly that moment, boom, you get filled at a really high price, and then it crashes down. These pump and dumps happen all over the place on the low float, thinly traded stocks. Lots of pump and dump schemes out there. And so if you're sitting in a market order, that could hurt you, right? You don't want that. If you're trying to get filled on a spread, you want the best price you can get. So use your limits. However, in this particular environment, I'm trading the SPY. So it's a very widely traded instrument, tons of liquidity. So I'm never going to get stuck in a trade. I'm always going to be able to get out, tons of liquidity. And the style of trading that I do is very fast. So seconds matter. If I used limit orders and I waited for a fill, I'd probably never get it. Ooh, look at that. Nice push. Nice push there. Beautiful. So if I waited for a limit, I wouldn't get filled, because when I take the trade, I want it to move for me immediately. So that's why I use the market orders. Now, market orders are subject to what we call slippage. And that to me is nothing more than brokers cheating us because you place a market order and then you'll get this little pause. They're going to wait and then they fill it. And it's always to their benefit and not to yours, almost always. So I don't love that about market orders, but it's the price I'm willing to pay to be able to get in and out very, very quickly. So I need market orders for my style of trading. Again, only in this environment, only on the SPY, only in this scalping environment. In any other environment, really, limit orders are going to make much more sense. So great question, Aggie. Thank you for asking it. That's my answer. Johnny, better to be safe than sorry. Absolutely, Johnny. I agree with you on that one. Always better safe than sorry. All right, so still getting a little climb here. And again, I think we could go for that overhead gap fill. And where did I say that was? I think it was at 16. Oh gosh, 69.60 if I'm right. 69.60 on the SPX. So we still have a good ways to go, but that could be our target. And maybe we don't hit that today. The other kind of way to figure out targets, and it's not accurate all the time because volumes change, but right now, we would be looking at a target of 692 or 693 to the upside and maybe 685 max to the downside based on the volumes that I'm looking at here. But that's not 100% accurate. Those volumes can change really quickly. But that's one way to sort of kind of guess, right? So 692 would be another 20 points overhead as it relates to the SPX. So that won't quite get us to the gap fill, but I think it's really possible we jump up there and hit that 691, 692 level. I think so. However, they're probably going to play for a while. They don't usually go straight to their target. They usually go around and under and over and, all over the place. They meander around before we get to the target. Usually is the way it works. All right, Aggie saying thanks for the explanation. Absolutely. Thank you for asking. And I really appreciate you guys that are asking questions because I promise you, if you have the question, other people have it. Go ahead and drop those in there. There's no such thing as a newbie question or a dumb question. Absolutely not. I think it's ask those questions because there's not a lot of places you can do that on YouTube. All right, look at this little push down. That's nice. That's that little meandering we were talking about. A little push down here. Let's see if we get some sort of correction to the downside. I'm just checking my order over here. All right. So let's watch and see if they're going to bring this all the way down to the VWAP or this is just a temporary little pullback. Johnny asking if I bought up or down. I bought, what I did is I averaged a put that I'm in. So I'm going to see if we can get this to come down to the VWAP. I wouldn't recommend to follow that because I'm just averaging a trade that I'm already in. But we are getting a rollover on the MACD, so that's nice. All right, they're bringing it down. A test of VWAP would be great. And we did get a little pop on the VIX right here, just a little one, a little move up there. Yeah, Meta is screaming today, 4.4%. That is wild. Very big move on Meta. All right. So we're just kind of, I'm watching to see. If I weren't already in that trade, I probably wouldn't trade this put just because we're over the VWAP. But if we come down and test the VWAP and break through it, we might consider puts. So far, we are still in an upward trend. So if you zoom out, you can see it, right? You can still see the trend. We're fixing to break it right here. But as of right now, it still is an upward trend. So if it turns and pushes back up to another higher high, that trend is still confirmed. All right, just kind of holding here. This is a high volume area. This level right here, this 689, almost 690. All right. Eggy, is there any easy way to sell or exit an order? Because as I do, it takes time and the market moves so fast. The profit changes when you're done with all the buttons. That is very true, Eggy. What I do is I have my sell order ready to go. So as soon as I enter a trade, I set my sell order and I have it just at that last button, confirm and send, and then that send button. That's where I leave it sitting. Just so that when I see the move I like, boom, I'm out. So great question, Eggy. I do that on Thinkorswim. You can also do that on most platforms. I think you can kind of step through your close order and just have it sitting at that confirm button. And that will definitely speed up your process. And it's a great question. All right. I like this. Let's get a test of the VWAP. Come on now. And we're right at the 100 period moving average. That's this green line right here. Getting a little reaction off it. Let's see if it breaks it. Eggy saying perfect, thanks. You're so welcome. You're very welcome. All right, little bounce here at the 100. Let's see if we can get it to go a little bit farther down. No, maybe not. MACD is starting to darken. And there's a little push. So we may not test the VWAP here. Let's see what they do after. Yeah, it looks like they want to try and push again. And at this point, if we come up with the MACD to the green side, we could consider a call here. We are coming up to the end of the stream. In fact, we passed it by a little bit, but let me tell you what my trading plan is for today. I'm going to be more bullish than bearish today. So again, as I've already said lots of times, if we're over the VWAP, I'm really mostly looking for calls. If we're under the VWAP, I'm looking for puts, but I'm waiting for my indicators to tell me that it's a good entry, right? So you don't want to get in at the highs. You don't want to get in at the lows, right? You don't want to get in puts at the lows. You don't want to get in calls at the highs, but watch for the indicators to give you the entry. And when you are over the VWAP, you're looking for calls. So that's my plan for today. I'm watching, and I'm more bullish than bearish. So I'm watching for these up moves. And as soon as this MACD rolls over, I might consider calls again. Watch your levels. And that is my plan for today. If we drop below the VWAP and start to head down, I will switch over and start looking at more puts. All right. So let's see, Johnny, 23% of fib now, it bounced back. Yeah, those fibs are wild, aren't they, Johnny? Very, very, very many times those Fibonacci retracements are so accurate. Okay, BD saying, looks to be bouncing off the bottom of the 5-minute opening range. All right, BD, I don't have the 5-minute, I have the 15-minute, but I'm sure that you're right. It's also bouncing off the 100, which just happens to be a confluence there. But good eye there, BD, and thank you for that. All right, guys. Well, that is going to do it for me today. We took one winning trade today, so we will be back again tomorrow. Tomorrow, I believe we're getting Michigan sentiment in data. We did have PCE today, and that turned out just fine. So and GDP. So those were good data, which also helped with our bullish environment. But I'll be back tomorrow at 11 a.m. Eastern. And I appreciate you guys. We will be trading again tomorrow, and I'll see you then. Thanks for everything, and thanks for joining me. See you tomorrow. Bye for now.